Hello, this is Alex Kazmark for the FXEdge.com, and this is your free daily Forex video for October 20th, 2009. Quick reminder before I begin, the purpose of this daily video is education and not an alert service. I'm not going to make any trade recommendations here, but what I am going to do is point out levels of support and resistance for the next 12 to 24 hours. Please keep in mind that trading with leverage is very risky, so please don't trade any real money until you've established a proven track record of success on a demo account. Trading conditions are always changing, so make sure to watch tomorrow's video to stay updated. Well, the euro came within 5 pips of breaking through the 150 level, and upon a rejection, the pair traded to a low of 148.80. With the way the pair recovered to the 149.50 level before the New York close, we think that there's still room to run further north. The Canadian dollar was the standout loser of the day, falling more than 2 cents after the release of their interest rate policy, along with a statement that said they will keep rates at 0.25% until June 2010. Depending on how the loonie reacts over the next several days, we may or may not see another run towards parity. Data out of the US pointed to no inflationary pressure from the release of the PPI. And there's little data being released today, much of it being out of China. And what we're going to be looking for here is industrial production and a GDP level. Hopefully that's going to point to whether or not the Chinese economy is remaining robust, and we'll see how the dollar reacts following that news. Currently looking at the euro dollar on the daily, current rate is 149.37. We found quite a bit of support at the 148.80 level. That's our first level of support. Below that, we're going to see at 148.50. 148 follows, along with 147.50 and 146.80. We're expecting a run towards the 150 level, and that remains our first level of resistance. Above 150, we'll look to have a run at 152.25, along with 153. Now, don't get me wrong, we could definitely see plenty of stops between the 150 and the 152.25 level. 150.20 comes in mind, and then of course all the fractals, the 150.50, 150.80, the 151 level. There could be stops that get built up all in here, and what we could see is a breakthrough those stops could lead us to the 152.25 level. At the same time, without knowing the exact data between the 150 and the 152.25, we could definitely see resistance at any one of these markers. Looking at the pound dollar on the daily, currently trading at 163.80. First level of support is going to be found at 163, followed by 162.50. Below that, we'll see 161.20, 160, and 157.80. What I want to mention here is the main level of support is going to be the 161.20 level. That was the area where the pound ran into a lot of resistance. It's now going to turn into a level of support. What we might see over the next few days is continuation of 162.50 being the short-term area of important resistance. A break below that will really find a lot of support at the 161.20 level. So what we would like to expect to see is a run as well that we've seen up to the 164.65 level. Now a bounce, we'll see a little bit of support here before another break towards 161.20, and then we'll see another rise over the coming days up to the 168 level. First level of resistance is now going to be at 164.65. Above that, we'll run into resistance at 166 and 167.30. Above that will be the 170 level. Dollar Swissy currently trading at 101.17. First level of support is the 101 level. Below that, we're going to run into support at 10080. That's going to be the bottom we saw yesterday, the low. Below that, we'll run into parity, and below parity, we'll have 98.83. First level of resistance is going to be found at 102. Excuse me, first level is going to be the 101.30. Above that will be 102. Above that is 102.40. 103.20 follows, and 103.50 is after that. What we did here is we drew a trend line from this pivot high to the last pivot high, not including this previous high that we just had on the 18th, or excuse me, on the 19th. And what we could expect here is perhaps a bit more of a retracement targeting the 102 level, most likely the 102.40 over the next coming days prior to seeing a bounce and heading lower. Again, I want to make sure that everybody understands that this analysis can change on a daily basis depending on what happens with today's candle. So we see a break below 100.80, for example, then of course we may see the target of parity a lot sooner than expected. Dollar yen currently trading at 90.67. We continue to see a bit of consolidation before a potential break lower is what we're expecting. Currently have a trade with our members for a short. What we've been analyzing here over the last few days is this V pattern. We had a bounce, have now run into resistance at 91.50. Found support at 90.20. I mentioned this last couple of days. 90.20 is now first level of support. This was the previous resistance level over the last few weeks. So this 90.20 level is important. A break and a close below that could target the 89 and the 88 levels. 89.50 being our second level of support, 88.80 being our third, and 88.20 being our last level of support. First level of resistance is now going to be 91.50, followed by 92, 92.50, and 93.20. If you'd like a more detailed analysis with potential trade opportunities, please join us in the members section. This has been Alex Kaczmarek for the FXEdge.com free daily Forex video for October 21st, 2009. Until tomorrow, good luck trading.